Can I start now, please? Okay. Uh, Fine. Yeah, what they are asking. See, if you have a idea about this, this is the way it will be happen. Is it? This is the way your question paper will be there. Okay. And first and foremost, we will go with the questions. Okay. What they are saying? They are saying that what is the purpose of what audit engagement letter, and what are the 4 items which should be included in the engagement letter. How many marks are there? 4 marks are there. Fine. Next, explain why the following factors should be considered by Orange and company. What are why the following factors should consider by Orange and company prior to accepting Scarlett company as a new client? Is it right? They have already mentioned it. Is that outgoing? You have to give an explanation. Is it right? 5 marks. Is it right? 1, 2, 3, 4, 5. Okay. Outgoing audit response, management integrity, preconditions for an audit, and independence and objective and resources. Fine. Next, so what is the C? A, B, where is C? Fine. What happens? Fine. Okay, no problem. Fine. Okay, so we'll see. Describe substantive procedures the auditor should perform to have obtained sufficient.
Sir,
Yes, tell me, please.
can you zoom in?
Is it okay now? Still you need?
Yes, it's okay.
It's okay, fine. Uh, A, B, C question, somewhere it is there. Okay, fine, no problem. Yes, fine. It is scenario C. Okay, scenario what? 35, 5, 5, 10, 10, 10, and 14. Something is missing, is it right? Point number C. Don't worry about that. Okay, we will see. What they are saying, what are the audit engagement letters and 4 items which should be included in the audit engagement letter. Is it right? This is the, see, this is the theory one. Okay, is it? This is a pure theory. Okay, this is nowhere related to that. And if you take into consideration also, this is also what? This is also a theory. Okay, this is also a theory. Very pure theory. Okay, there is no, and this is with respect to the scenario. Is it? This is with respect to the scenario, substantive procedures. Okay, now is it? What are the I think I have mentioned you this in the yes. What see? there are two things, is it right? What there are two questions has been there here, is it right? The, the first question is what? This examine the purpose of an audit engagement letter, is it right? The second one is what? And list out four items which should be included in an audit engagement letter, is it right? There are two things that has been mentioned here. The first one is audit engagement letter. Fine. Now, is it? Now, what is the basic thing that has to be included is, see, this is the first one. Is it right? This is the first one. The purpose of audit engagement letter is the outline the responsibilities of the audit team and the client. What is it? It outlines the responsibility. What is the responsibility of the audit team, and what is the responsibility of the client. It minimizes the risk. The most important thing is it will minimize the risk of any misunderstanding. There should not be any mistake. Everything should be in black and white. Okay? Everything should be what we are doing, what is the scope, what is the responsibilities, what is the fees, what is the framework. Everything has to be there. There should not be any misunderstanding between the audit and the client. Definitely, when you are talking about the engagement letter, what we are doing, the auditor is confirming the acceptance. Is that the auditor is confirming the acceptance? That is the most important thing that matters. Is it right? That is the most important thing. First, you should have minimum understanding. The second one is you are as auditor, you are confirming the acceptance of the engagement, and based on this is a contract. Is it right? Based on this, outlining the what are the terms and conditions we are doing. Is it right? This is the basic purpose of an engagement letter. The first one is it gives the responsibilities of both the auditor and the audit client. Fine. So of this, it should be minimize the responsibility, minimize the risk of any misunderstanding. Next, it confirms the acceptance of the engagement by the auditor. And third one is it is on this basis only there will be terms and whatever the terms and conditions. That's as simple as that. That is nothing but in simple terms they use it as a engagement letter. We call it as a offer letter. Is it? In general way we call it as an offer letter. In audit language we use this as a engagement letter. Fine. Now, what are the items we are including? They say any four. Is it right? What they have said? They said any four items. Is it right? Any four items. The objective, see, that is the reason I have given you on the message box 6. I appreciate you that you have written, isn't it? But 6 means 6. 4 means 4. Is it right? The purpose of asking you is I told you you can refer the books, and you can write. There's no wrong in that. Is it right? You have if you can write without book, that's fine. But if you are referring the book, the moment they say 6, make it mandatory, compulsory that you have to write 6. Otherwise, see the things. If they are asking you 6, is it right? They are asking you 6, and it will be assume it will for 6 marks. Is it right? And you are writing 4. Is it right? Automatically, you are losing 2 marks. Or by default, you are giving away 2 marks to them. Is it right? And again, from these 4 marks, how much they will give, we don't know. Is it right? So make sure whenever they are asking you 6, you have to write 6. They are asking you 2, you have to write 2. Is it right? That's very, very keep that into consideration. Okay. Fine. Keep that into consideration. What they are saying is, they are saying that what are the things we have to include. What is the objective and scope, both should go together, is it right? Both should get the objective and the scope of audit. What is the responsibilities of the, see, it is a simple ones, is it right? Responsibilities of the auditor, responsibilities of the management, is it right? Responsibility of the auditor and responsibility of the management. Fine. Now, after that, identification of financial reporting framework, is it? Expected form and content of any reports, is it right? I'm just putting it at reference. The form of communication or form of any other communication of the results of the audit, is it right? Is that if they want elaboration of scope of audit, is that means we want to do something more, is that reference to legislation. If they want to do IT audit, is it right? They want to do they want to do internal audit, is it right? They want to do any other audit, is it, apart from the statutory audit, is it? They want to do the functional audit, is it at like Oman Air, is it right? They want to do aviation audit, they want to do bank, we say bank audit, is it right? Likewise, as per the legislations, if anything we have to do, we should take into consideration, is it right? Now, another important thing, the basis on which the fee of the will be calculated, is it? Fees, and only we should not write fees, is it right? This is the most important thing. You have to mention the basis. This is the very key word, is it right? The purpose of revision is you should make it as what the basis for which the audit firm will calculate the fees as such, is it? A request for management to agree to the terms of audit engagement and acknowledge the receipt of the engagement. See, it's very simple, is that whenever whenever anybody gives you offer letter, is it right? It is nothing but what? It is a acceptance letter. Is it right? It is nothing but it is an acceptance letter. Acceptance by whom? By acceptance by the auditor. Is it right? Acceptance by the auditor. And any obligation to provide working papers to the third parties. Is there any restrictions are there? Is it right? Any restrictions on the auditor's liability? Is it right? Now, these many are there. Is it right? You choose it. Is that whenever you are doing like this, make it a point. They will not ask you maximum more than 6. Maximum. Is there more than 6? I don't think so. Is it right? So, this is the basic. Is that, remember this. I will ask you at any date. Now I am giving you a question every day, one question. Now I will increase that frequency also. You know what? Theoretical questions you should write. Is that in message you write no, nothing will happen. Is it right? In message you can write as simple as that. These are the purpose of the audit engagement letter. Is that the purpose of letter is nothing but, again I am explaining the response with we should have the outline the responsibilities of the auditor and the client, minimize the risk of misunderstanding, auditor acceptance of the engagement, and basis of contract by outlining the terms and conditions of the engagement. Okay, this is the basic thing, is it? Okay, next. Are you clear about this? I am very slow here. Is it right? See, there is no point of rushing. Is it right? There is no point of rushing and doing 20 questions and without any proper understanding. Okay. Next, what it says is it now 4 marks are there. Is that explain why the following factors should be considered by why explain why the following factors should be considered by Orange Company prior to accepting Scarlett Company as a new client. Okay, what are the factors which you have to consider? Is that what they say? Now, when you are talking about what are the different factors, is it right? See, the most important thing, as you have been appointed as an auditor, is that you have to get the outgoing auditor's responsibility. This is one of the preconditions. This is one of the preconditions. That's what it says. Is it right? Prior to accepting an audit engagement, the auditor is required to contact previous auditor. After obtaining permission from, we have to now you have a clear cut idea. We have discussed, so any communication we are doing with the third party, okay, any communication, you have to write this. Prior to accepting an audit letter, the auditor is required to contact previous auditor before sending to the bank for confirmation. Is it before? I'm giving an example how it should be. Is that before sending a bank for a confirmation, you have to obtain the permission of the client. Before sending any letter to the third party for inventory, you have to obtain the permission of the client. Is that in some cases what we have done, we have referred this. Is that if that is the case, you have to give the reference number of the client letter also. Is that you have to give the reference number of the client letter also. That makes your answer more effective. Is that makes your answer more effective? Is that to ask all the information related to decision whether or not should accept appointment. You have to ask the previous auditor that it's feasible to accept the appointment. Means why we are doing this. This explanation, you should not write this. Why we are doing this? What are the reasons? Whether it is a genuine reason, it is a valid reason, or it is an invalid reason. Is it right? If it is a valid reason, then only a new auditor appointment is going to be valid. Otherwise, what will happen? Maybe there is some wrongdoings will be there. Because of that, we are not going. We should be careful before we accept the audit engagement. What they have to do? The auditor should consider the outgoing response to assess whether there are any ethical or professional issues. Is that what they have to take? They have to take any ethical or professional reasons why the firm should not accept the appointment as such. Is it? Means this is the most important thing. If there are any ethical or professional issues, then definitely the incoming new auditor should not accept the appointment. Fine. Next one. This is the first one. Second, what the second one says is that if Orange, what it says, into management integrity, is that management integrity means management has to put forward everything. Is that unbiased objectivity, integrity? It is a professional principles of professional ethics. Is it right? You should make sure that the management should provide all the information. That is very important. Is it right? If the audit has the reason to believe that the management lacks integrity, is it? If the management is not straightforward, then there is a greater risk of fraud and intimidation. See, before you accept the audit, you have to be very careful. Is it right? Before you accept the offer, you have to be very careful. Once you are see what I told you in the beginning, once you accept the offer, you should not resign. Is it right? Resignation of the auditor from the client is the last option. In some cases, it is not the option also. It is not the option. So before you take the things into hand, that yes, I am going to take up this assignment, we have to be very carefully. We have to scrutinize, due diligence, as simple as that. Maybe you have learned this word, is it right? Due diligence. We have to do a lot of due diligence before we accept any offer as such. Is that there is a greater risk of fraud and intimidation. Orange company needs to consider management integrity, because if there are any serious concerns, then Orange company must not accept the audit engagement. You can decline the offer. Understand my point? See the thing. Auditor can decline the offer, but auditor should not resign. Is it right? This is the most important point we have to mention. Is that if there is any question mark, any sense that we have called understood there is a lack of management integrity and there is a risk of fraud and intimidation, the auditor should consider and they should not accept the audit engagement. Is it right? Now, what they say that these are what the there are the five they have put it. Is it right? They have put it as 5 points. Is it right? Preconditions of for an audit. Is it right? What are the preconditions? Orange can only accept the audit engagement if the preconditions are present. What are the preconditions? The preconditions is, one is you have to get the acceptance from the response, not acceptance, response from the outgoing auditor. Is it right? And we should also the precondition that management will use the acceptable financial reporting framework. Is that what is the financial reporting framework? The financial reporting framework is they are preparing as per IAS, they are preparing as per IFRS, they are following the regulations of the country. Is it right? And last but not the least, we are going to audit as per international standards of auditing. Is it right? This is where we have studied. This is studied almost in the beginning, financial framework. Is it right? That what is the precondition? That the management will use the acceptable financial reporting framework, for which they are preparing the financial statements. And confirms that the management acknowledge and understand what management should know what is the responsibility for them. Is it right? What is the responsibility of the management? The responsibility of the management is preparing the financial statements as per the accounting framework. The management responsibility is they have an internal control necessary for the preparation of financial statements, providing auditor with an access to information. Is it? The management has to provide the auditor with access to information for the audit. Is it right? And not only the information, but they should also give access to the staff within the entity. To why we are doing this? We are only want to make sure that there should be a sufficient audit evidence. What are the preconditions? Preconditions is they should prepare the financial statements as per financial framework. Is it right? They have to prepare the financial statements as per the financial framework. One, is it right? They have to have an internal control necessary for the financial statements to be free from material misstatements, and they should have an access to the information as well as to the staff. Is it right? To obtain what? To obtain audit. If the preconditions are met, not present, we have to decline the. What is the point number 4? Is it? The auditor must concern independence. Independence means you should not get under any influence. Is it right? You should not get under any influence as such. The auditor must consider that whether any threats to independence is there. And if there is no independence, definitely which cannot be reduced to an action. If there is no independence, definitely the auditor cannot perform its duties. Is it right? Which reduces if there is no independence, then what will happen? There will be a low level of use of appropriate safeguards. Is it right? such as if any of the orange staff has shares in Scarlet or related to staff employed to means any mutual understanding. Okay, mutual understanding is there. Definitely what will happen, we say independence, objectivity, intimidation, is it right? All this will come into picture as such. Is it? Then we cannot perform in a professional way. If such threats are present and cannot be sufficiently mitigated, if such any threats are there, which are the threats in terms of independence, is it? In terms of objectivity, in terms of any, we have to make it sure that any people are working, they have any intercommunications, as simple as that. Any self-interest is there, automatically. What will happen in that case? The auditors cannot perform the job with independence and objectivity. They should not accept the audit engagement. Is it right? Now, what they say, resources available. One of the preconditions, what they say in the point number 3, they say that you have to have an access. Is it right? You should have access to the information, and you should have access to the staff also. Is it right? Is it? That's very important. Audit, Orange must have adequate resources with relevant experience available at the time of audit, is likely to carry it. Fine. All audit staff deployed by the audit must be capable of carrying out the audit in accordance with ISA. Is it? Now, what happened? That's the amazing thing. It's not only, see what we are doing, it is not on all 4 points. Is it right? All 4 points is related to what? Is related to client. Is it right? Is related to client. This one, is it right? This one is related to what? Is related to the audit. Okay, audit firm. Is it right? Audit firm. Now you are accepting the offer. Is it right? When you accept the offer, you should be capable of having that much skilled people to discharge the responsibilities. Is that you should have the skilled people to discharge the responsibilities as such. Is it? If you don't have the skilled people, relevant people, you are accepting an audit of a bank. Definitely you should have some people who are specialized in bank audit. You are taking in terms of some automobile industry, you should have people who are specialists in automobile. Educational industry, you should have people who are in education. They should have the expertise to perform the audit of the firm. Means if you are accepting the offer, you should have the resources with which we can deliver the assignment. Is it right? Now they are talking about the audit risk and audit response. Is it right? They are talking in terms of audit risk and audit response. Fine. Is it right? We will cover this, and we'll go through that one question. Is it clear about this? Again, when we are going to do something next Saturday, is it right? Next Saturday, just if anything repeated is there, just I will skip it. Okay, just I will skip it. As simple as that. Okay. Next, is it? This is the next one is the audit risk. Okay, next one is the audit risk and audit response. Now we will see what is the audit risk and what is the audit response. Fine. Is it? We will talk about point number C. Is it right? Point number C. Here I will write it. Okay. Point number C. Is it? Point number C. Is it? What is the audit risk and what is the audit response? Is it? First, what is the audit risk? Audit risk is something about inherent risk, control risk, and what is the third one? I know, but I am expecting you to tell.
Detection.
Pardon?
Detection risk.
Detection risk. What are the two components of detection risk?
Sampling risk and non-sampling risk.
Good. Okay, that's fine. Okay. Now we will focus on that only. Is it? We will focus from the inherent risk, detection risk, and the control risk. Inherent risk, control risk, and detection risk. Fine. Is it? It is on the first job you are a supervisor of an audit firm, audit of a new firm. See, this is what it says. The moment you are talking about a new firm now, definitely you are mentioning what is the audit risk. Is it right? Scarlett company for the year ended. Scarlett manufacture chemicals. That's you have to be very specific which type of industry it is in domestic and commercial products. Is it? It is none. The company financial accountant was taken ill. Alhamdulillah. In May 2005, is unable to see. This is one of the audit risk. Is it right? Is it? Is unable to undertake the preparation of the year-end draft financial statement. As a result, company has recruited temporary financial accountant. We cannot recruit a stopgap arrangement. Is it right? We cannot have a stopgap arrangement. Who will prepare the draft financial statement? The year-end financial statements need to be finalized quickly as the company is. You cannot put these conditions. Is it right? You cannot put, this is the audit risk. Is it right? You cannot put that you have to finalize quickly. The company is looking to raise finance through the bank loan to replace the 3 machines of production facilities. The bank has asked a copy of audited year-end financial statements by the end of September 2005 before they agree to a loan, and the directors are keen to report strong results. Is it right? Keen to report a strong. We have to report what? We have to report the actual results. Is it? We have to be very true and fair. Is it right? We have to be very true and fair. In the year, the company purchased a specialized machine to develop new range of chemicals for a major customer. Fine. Only trained staff are allowed to operate this machine, and the staff members have to undertake 2 days of training. Fine. Followed by an assessment at the end of the training period. The training cost is how much? 15,000 has been capitalized. Note, as part of the cost of the asset. Fine. As training cost. Fine. Pre-operative cost. If it is pre-operative cost, is it right? You have to, pre-operative cost should be capitalized. But it is a very open one. Okay, we will discuss this. The company sources many of the raw materials to be used in chemical process from international supply, can be in transit for up to 3 weeks. Is it? It is also a risk. Is it right? It is also that you are in the 3 weeks. You have to plan. Is it right? As per the requirement. Is it right? It means there should be a proper planning. Which contains a clause that states the Scarlett company is responsible for the goods as soon as they leave the supplier's warehouse. I am not responsible. Is it right? I don't think so. When I am purchasing it, it's the person who is delivering. He is responsible. Is it right? Usually, if that term and conditions is not there, then my responsibility will increase. But in usual way, how it happens is, whenever we are buying the product, it is the suppliers who is responsible to deliver. Is it right? Here also you have to make it a point. Is it right? 1, 2, 3, 4. Is it right? It is 1, 2, 1. is there 1, 2, is there 3, 4. You have carried out preliminary analytical review which indicates that receivables collection period has been increased. Receivable collection period should not increase. Okay, so receivable collection period should decrease. Receivable collection period should decrease. The credit controller has confirmed that some customers are taking longer to pay than the previous year as awaiting the payments from the customers. This is point number 5. On May 29, the directors announced that one of the brands was discontinued to the fall in demand. This resulted in 4 staff members being paid redundant. Means they don't have any work. Is it right? The payroll department calculated the level of termination cost associated with the redundancy, and they will pay in the July 2005 when they have May. Is it right? When they have it happened in May 2005. Is it right? Fine. 4 staff members. Again, we will cover this. It is point number 6 if I am right. Which one? Point number 5, point number 6. The directors each received a significant bonus. Is that without naming this? Is that this is point number 7? Is that this is an audit risk? Is it right? Significant point in the year in which has been concluded in the payroll charge for the year of statement of profit and loss. Local legislation requires separate disclosure for directors' bonus in the financial statements. Is it right? Means they have received a significant bonus which has been included in the payroll. See, you cannot, is it right? You cannot make sure that your salary should be different, your bonus should be different. Is it right? Your salary you should not include the salary. Rule says that you have to disclose separately, but they are not doing that. Okay, but they are not doing that as such. During the year, company sold a batch of chemicals to customers. Fine. Again, there is a glitch here. At the beginning of 2005, the customer returned this. Is it right? Chemicals purchased by the chemicals because the chemical mix was not in line with the customer's specification. A credit note has been yet to be received. Is it right? But to the customer, yet to be issued to the. Now you understand. We have covered something credit note. Is it right? Means if it is a product has been returned, then they will not give them cash back. We will give them a credit note which they can use the credit note in future whenever they are purchasing from us. Is that right? When we are purchasing from us. Is it? Now, what happens apart from that? The chemicals has not written down to the scrap value within inventory. Mean even we have not that defective chemical we have not written down as a scrap also. Is it right? That is, see, is it right? This is point number 8. Fine. Now, the company usually pays its suppliers by the end of each month. However, due to financial accountant, see who cares about illness? Is that we want that because of it's because we are not saying that it should be dependable on one person. Is right? The payment run for 2000 was not performed. June 1st, the finance director informed that in order to show consistent results with the prior year, the payment run is shown as unpresented item on the year-end bank reconciliation. Is it right? This is point number 9. Fine. This is point number 9. Fine. Now you have handful of your inputs. Okay, you have 9. Is it right? We have 9. We with the audit. What you wish the audit. This is the question from the auditor's point of view. Auditor should identify the risk and what is the response the auditor will will initiate. Is it? What is the response the auditor will initiate from their side? Now, what is the audit? The first audit risk is he is a new client. Is it right? He is a new audit client to the firm. The engagement, definitely the engagement team will be unfamiliar with the policies, transactions, and see. This is the new client. Finance manager is ill. New finance manager came. The new finance manager came for a very temporary basis. The new finance manager wants to get the loan and he wants to submit the financial statements as early as possible. Is it right? And in between somebody became ill. Is it right? Somebody became ill. We are not processing on time. Is it right? We are not delivering the product. Is it right? We delivered the product, but the product has been returned. We have not issued a credit note. Understand what? A full resource is there for us. Is it right? One by one simple. Is it right? Because he is a new client and unfamiliar with the policies, and the balances. Because of this, what will happen? Hence, there will be a increase in which type of risk? Detection risk. We cannot detect it. Is it right? Say 1 year, 2 years, 3 years experience is there. Then you know the client, you know how the things are moving. Then we will be in a position to work out in a very familiar. First year, definitely it will take time for settlement. What the auditor should do? Is it right? Should ensure that we should have what? Experienced team. We should not employ a new team. Okay? We should not employ a new team. And addition, they should take sufficient. You cannot do it very fast. Is it right? Sufficient time. We cannot take more time also, but sufficient time must be set aside to the team members who will get familiarized themselves with the new client. A document of its systems and controls and understand the risk of themselves with the new client. Documents its systems and controls and understand the risk. See, whatever is happening, documents. It's nothing but we are talking about what? We are talking about what are the manuals. Is it right? Or either we should take manuals or you have to write down the each and everything. Is it right? What you are doing. In terms of what? In terms of procedures. Is it? First, this is a general question. Is it right? This is the general question. What is the first general question? That what is the risk? We are having a new, we are new to the audit. Is it right? We should understand. We are not familiar with the policies and transactions of the balance sheet. It will increase which type of risk? Detection risk. What is the response? We should not go with a new team. We should go with an experienced team. Is that we should go to the experienced team and we should have a sufficient time. Means sufficient time means like this. Is that we are talking in terms of 31st December. Is it right? Sufficient time means you have to plan ahead. Is that you have to plan ahead. Is that we have to plan by how much you are planning ahead? It's very, very subjective. Is it right? It's very, very subjective that no, somebody says 5 months, somebody says 6 months. That is not the case. You have to mention that you have to plan ahead. Is that you have to have sufficient time and you have to familiar with the documents and the systems. Okay. The first one. What is the second one? In addition, there is a less assurance over opening balance. An auditor did not perform last year audit. Understand? See that this is first time we are doing this. Is that? See, when you have done last year audit, is it that? And when you did last year audit and you are continuing with the current year audit, what will happen? Definitely last year audit, closing balances, is it? Closing balances, you know, is it? Because you have done the audit. Now the reliability on the closing balances will increase. But that is not the case here. Is it right? That is not the case here. What's happening? Last year done by some other person and current year you are doing as a new auditor. Is it? Then what in this process, what is the risk? The risk is less assurance. If that is the case, is it right? You put one line here, is it right? You put one line here because it belongs. If that is the case, what is the response of the auditor if you are not done the previous auditor and we are working with the new balances? You increase the audit procedures for especially which type of balances? Opening balances. Is it? Especially which type of balances? Opening balances. You have to reduce the procedures for the opening balances as such. Once you have increased the procedures, what will happen? Definitely we can rely on the opening balances. Fine. That is the see, this is 1A. Is it right? 1A. The company financial accountant has taken ill in May and temporary accountant has been drafted to prepare the financial statements. Is it right? This is an increased risk of errors. Is it right? The temporary means definitely they will not have that much responsibility. Is it right? Because as the temporary financial accountant may not be it's not a stopgap arrangement. Is it right? It is not a stopgap arrangement. Is it right? As temporary financial accountant may not be familiar with the activities and so errors and commissions will go notice. Is that what we have to do? See for everything there should be some solution. Is it right? Discuss with the management the competency of the temporary. Okay, you appoint it. What we are doing, we have to reduce the risk to the lowest minimum acceptable level. Understand point? This is what the basic objective of an auditor. Is that lowest minimum acceptable level. If you appoint temporary auditor, fine. If there is no other option, we have to go with it. Is it right? In addition, the engagement should increase if you are working with the thing, the auditor should take precautions. Is it right? What the auditors should do, the auditors will increase the substantive procedures. Is it? To reduce the audit. The moment you are increasing the substantive procedures, there is a possibility, there is a probability that we can reduce the audit risk as such. Is it right? That's the thing we should take into account. What the point number 3 they say? They say that year-end fund have prepared by the end of, you cannot see how you can prepare. Year-end financial have to be prepared by September 2000 in order to secure a bank finance. Is that management wish to report strong results? It's really very simple. Is that it's really a very, very wrong message you are going to give. Is that means if that is the case, in simple terms, it is a fraud. Is it right? That you are manipulating the accounts as such. Maybe they have written here on the right hand side. The increase the risk that the directors may manipulate. This is the thing. Manipulate the financial statement by just what they want to increase the profits. Is that is not the case at all. The audit engagement should maintain professional skepticism. Is it? Throughout the course of the audit, is it? Details of cutoff testing, is it right? See, now we are covering each and every point randomly, is it right? You should have detailed cutoff testing for receivables, for payables, for non-current assets, for cash, everything. Is it right? Such as revenue, inventory, payables should be performed, that the cutoff has been correctly applied. And subsequently, we are not talking about any substantive procedure, but you have to write substantive procedures performed on estimates and judgments to ensure what? To ensure the accuracy. Got my point? See, that is what the directors want. The directors want that the financial statement should be done early, and it has to show a strong results. Is it right? And definitely, what are the things we have to make sure? What is the audit response? The management should be professionally skepticism throughout the course of the audit. And you have to do a detailed cutoff testing should be there, accuracy should be there, substantive procedures should be there, all the things wherever you wish. Is it right? Now, what another point? Is it right? Another point. Very technical point is this. Is it right? What it says. A specialized machine was acquired and staff members has to be trained in the machine using 15,000, which has been capitalized as part of the labor. Is it? Now, property, plant and equipment. I have mentioned there. Is it right? Where is that? I have mentioned there very clearly. Is it right? I have mentioned? I mentioned somewhere. Is it right? I mentioned here. Is it? See, I have mentioned here while explaining pre-operative cost. Is it right? Should be capitalized or should not be capitalized is a question mark. Is it right? Should be capitalized or should not be capitalized is a question mark. Is it right? Pre-operative cost should be capitalized, but training cost is what? It is post-operative cost. Is it right? Technical is talking about it. Training cost is a revenue. Training expenses. Is it right? Training expenses is going to be a revenue expenses. It is not a capital expenses. Fine. Now, that's what they are making it very clear. Is that property, plant and equipment. Property, plant and equipment prohibits training cost from being capitalized, and therefore property, plant and if you capitalize, it means you are increasing value of the property, plant and equipment, and you are reducing the expenses. Is that one side you are increasing the assets value, and other side you are decreasing the expenses. If the training costs are not written off to the statement of profit and loss. Is it right? This is the one point. Is it right? This is the one point. That's all. Is it? Where is that? Okay. You put one dash. Is it right? You put one dash. The second one is we are talking about. That is another one. Okay. That is another one. What they say? Discuss the accounting treatment with the directors and request that the adjustment should ensure appropriate treatment for the training cost. You should not capitalize the training cost. You have to obtain the breakdown. Is it right? You have to obtain the breakdown of the cost. Is it right? And you have to distribute. Is it right? You have to segregate. What is the capital cost? Is it right? And what is the revenue cost? Is it right? What is the capital cost and what is the revenue cost? Next. Is it? This is point number 4. Is it right? This is point number 5. Okay. This is point number 5. The delivery time of 3 weeks from it has been mixed up. Okay. The delivery time of 3 weeks from the company international is likely to result in goods in transit at the year end. Is it? Definitely 3 weeks time you are ordering at 25th of December, it will come next year. Is that even you order 20th of December, it will come next year. Is that the company has advised that the contract with the supply means that the scale rate will rest again 1 minute. Is it right? Separate this. Is it right? You separate this from here, and again you separate this from here. All are different sentences. Is that discuss with the management the point of at which the inventory should record it and review the contract with the supplier. Now what happens if it is for 3 weeks? Is it right? If that 3 weeks you are placing the order, is it right? Then you should make sure that when it has to be recorded, it has to be recorded at the time of invoice, it has to be recorded at the time of payment, or it has to be recorded at the point of whenever we are going to receive it. Is it right? That's very, very specific. Is that goods in transit? Is that sometimes what will happen? You are placing the order, it will come. But most of the cases, as a recommendation, you have to record it when you have going to receive it. Is it? Review the control the company in place to ensure that the inventory is recorded from the point of dispatch. Is it right? Means you should make sure that how it is going to be worked it out. They say that if they see the company has advised that the contract with the supplier means that Scarlett will be responsible for goods from dispatch. Is it right? From dispatch, and therefore inventory should be recorded when the goods are sent by the supplier. Fine. Rules is very clear. Is it right? Rules are very clear. The moment they are dispatching it, their responsibility is over. Is that we have to take the responsibility on us. We have to take the responsibility on us. What we have to do? Definitely in that situation, we have to review the controls in place, how the inventory is recorded from the point of dispatch. Is it right? Means definitely we should keep a staff from our side. Don't write all these things, just I am explaining you. You have to keep one staff from our side so that things will be at ease. There is a risk that inventory is not recorded on dispatch, and therefore inventory liabilities are understated at the year end. Is it right? At the year end. There will be a fine. Is that? Now when you are doing the things, is that extend cutoff testing. Now you can understand how important is cutoff. Is it right? How important is it? You focus on, the cutoff is nothing but it talks about the date. Is it right? Review pre and post year end. Is it right? And supplier dispatch to know that inventory recorded in the where we have to record. That's very important. The moment it is dispatched, you have to record it. Is it right? Cutoff is nothing but you have to make sure 31st December before or 31st December after. Is it right? Now, no, the moment, that is the reason. If we work on the theoretical part, the applications will be very easy to work it out. There is it right? Preliminary analytics shows that what happens. The receivables turnover days has been increasing. It's not a good sign. Get my point? If receivables turnover is increasing, you are getting the payments, you are receiving the payments on a delayed terms. Previously you used to get on 38 days, now you are getting it for how many days? 52 days. It is not a positive sign. Extend post year cash receipts testing. Is that this is one of the points. See, now you can understand. Is that every point they are putting somewhere or other. Is that they are talking about inventory, they are talking about the expenses, they are talking about the capital expenditure, revenue expenditure, everything scatteredly they are integrating each and everything. Is that whenever you are talking about the receivables, the post year end cash, what we have received after the year end. Is it right? Whether is it right? After the year we have done, we are talking in terms of what? Aged receivables. Means aged receivables is who are not paying long term due. Is it right? Listing to assess the valuation of receipt. Valuation is one of the assertions of the receivables. What happens if that is the case? You have to review the post year end receipts, and you have to know what is the aged receivables. Is it aged receivables? Now discuss with the management whether the adequacy of any allowances for receivables has been made or not. Is it? Allowances is nothing but the provisions. Allowance is nothing but the provisions as such. Is it right? This is the one point. Now what it says, there is a risk that some receivables may not be recovered and allowance is required. We don't know. Is it right? See, if it is increasing from 38 days to 52 days, definitely there will be possibility of bad debts. Is it right? There is a possibility of bad debts. Is it? The bad debts will be received. We are not, tomorrow it will go up to somewhere, that we are not concerned about it. But is it right? The directors, what it says, is it? And the allowances for receivables understated. Is it? Under that means we should make it sure that whether we have made adequate provisions or not. What is the next point? Is it 4, 5, 6? Is it 4, 5, 6? This is the seventh one. See now, what some staff has been 4 staffs has been made redundant. Redundant means they are not going to work as such. Is it right? And they will not be on the payroll for. They will be removed from the payroll also sooner or later. Is it right? But what happens? See, if it is, see what usually what happens whenever you are removing some staff member, they say that yes, we are giving 3 months notice, we are giving 3 months pay. Is that the condition? Is that you have to pay. If you are removing instantly also, you have to give 3 months pay package to them. Is it right? That is what it says. Is that means they are not allocated any work. They have been discontinued, resulting in 4 members of the staff being made redundant. Is it right? The cost of redundancy is included in the payroll. Obtain the calculations. Is it right? Obtain the calculations of redundancy. What you have to do. You have to get the calculations of the redundancy. Whether they have made a provision for that. Is that you have to, what is the provision? Is it right? See, I don't know to what extent. Is it right? See what happens. Assume this is all debits and credits. Okay, just I'm giving you thing. You will pay. Is it right? You will pay in this is November. Is it right? You will pay in December. Is it pay in December? But the expenses is related to what? Is related to November. Fine. The expenses are related to November. But when you are paying in December. You have to write the entry now. Is that you have to write the general entry. Is it right? This is what the provision talks about. Is it right? General. What you will do? You will say that salaries. Is it right? Salaries account debit. To what will do? You will say it is a payables. Is that you say it is payables will be credit. Fine. Now next month is that this is what the provision talks about. Is it right? This is what the provision talks about. Next month when you are paying, is it right? What you will do? You will put payables as debit and you put what? Bank as credit. Automatically what? See, this is where it says you put a T account also. Is it right? You put a T account also. What happens? You are talking in terms of what? You are talking in terms, if you take into consideration bank. Is it right? you will put what you will do. You will put it as a salaries. Is it right? You put it as salaries. Then you put it as a payables. Is it right? Then when you are cancelling it, you remove payables accounts, and what you will do, you are going to put it as a cash. Is that this is the concept of provisions. Provision is nothing but just to make an estimate. Fine, that's a different case. But when you are making a provision is you will pay next month, but that expenses belongs to this month. What they say, obtain the calculation of redundancy and agree to the provision, whether we have made a provision for those expenses included as a current liability. Agree the redundancy payments have been paid. Means not only you have to make the provision, but you have to make sure that they have been paid. Is it? They have been paid as such. Is it? That's what it says. There is a present obligation for which cost is reliable measure, which will result in the outflow of funds. Definitely, is it? You have to pay for 3 months, whatever it may be. The IAS, you have to mention this. The moment you say provision, you have to mention IAS 37. It will give you marks. Is it right? It will give you F7 is mandatory for F8. Without accounting, there is no auditing. And because of the exemptions, you have not done F7. Is it right? Because of, but make it sure that you should have a complete, reasonable understanding about F7. Is that F7 says that IAS 37 is related to provision. That is the reason when you are putting the things, you put, see what is the related to this. This is going to be comes under which? This comes under financial reporting framework. Is it? This is where it says if a provision is not recognized, profit will be overstated, and liabilities and the payables will be under. If you are not doing any provisions, definitely the profits will be more. The directors each have been paid significant bonus at the year end, and separate disclosure of this is required in the financial local legislation. The director remuneration disclosure will be incomplete and inaccurate if the bonus is included in the payroll. I told you bonus and payroll should be, bonus and payroll has to be different, salary has to be different. Is that we should not never integrate it. Discuss with the management and review the disclosures in the financial statement that it complies with what? It complies with the local legislation. Whatever the local legislation says, we have to follow. Whether they are following it or not, you have to obtain this, discuss this matter with the management. Is it right? Last one, what it says, some more, is that? What it says, a customer has returned 120,000, a huge amount, is it right? A huge amount of the faulty goods, period to the year end, but credit note has yet to be issued. As the sales occurred pre-year, they should risk that the revenues. What you have to do, see, when there has been return, what will happen? There should be sales returns minus sales returns. Not only sales returns, but also in the receivables. Is it right? Also in the receivables, you have to reduce it. Is it right? You have to reduce that credit sales. Is it right? You have to reduce that credit sales as such. So as a result, occurred pre-year, there is a risk that the revenue and receivables are overstated. They have not deducted, maybe they have not deducted it from the sales as well as from the receivable. If the credit note is not correctly issued, correctly recorded in the year end. What is the solution? What is the response of the auditor? Inspect a copy of the credit note. Straightforward, to the point. Is that? Confirm whether they have made any adjustments to the revenue and receivables. Straight to the point. We are not going to have any general discussions at that. The company suppliers have paid on 1st June and payment has been included as an unpresented in the year bank and bank reconciliation. If it is bank reconciliation, review bank reconciliation. Request the bank reconciliation amendment to remove the supplier's payment. Is it right? Is included as an unpresented payment for the. If unpresented, you have to request that it should be removed from the bank reconciliation step. Means you have to redraft it. There is a possible evidence of window dressing. Understand? Most of the concept is there now. Window shopping. It is also this window dressing is this is an accounting word. Is it? This is an accounting and auditing word. Window dressing. Is it right? Means you are means the financial statements has been manipulated. Very clearly straightforward. And for this, what you have to do whenever there is a window dressing, see, our task is directly we have to go through what? General entry. Because general entry is the first source of the evidence. Okay? General entry is the first source of evidence. Fine? This is the audit risk and this is the audit response. Fine. Describe the substance. We will complete this and we'll stop here. Okay. Describe the substance. See, very simple. One question for 30 marks. It makes sense. Is it right? It makes sense. We have done the purpose of engagement, the list that has to be included in the engagement letter. Is it right? We have done what is the second question we have done? We have done what we have to take the things before accepting. See, these are the sure questions. At least if you are doing 5 questions like this, 3 questions will come. Understand? 3 questions will come. There is no point. Audit risk and audit response will be there. Okay. Now, what they say, they are talking about describe the substantive procedure to perform for the what? For the redundancy cost. Is it right? What is the redundancy? Means when we are talking about the redundancy cost, definitely we have to know that whether provisions has been made, whether the approval of the management has been taken, whether the payment has been settled on, whether they have transferred the payments. Is it right? All the things has to be taken into consideration. Is that? See, I just mentioned. Is that you have to get the approval from the management first and foremost. Is it right? Review the board meetings minutes. Is it right? Review the board minutes for evidence to discontinue the brand of the chemicals. They have discontinued one brand. See, why happened all these things? This happened because you have discontinued the brand. Brand is defective. We are getting the sales returns are there. Definitely the business is not there for the specific brand. When the business is not there for the specific brand, there is no alternative for the firm. Is it right? The firm has no alternative. They have to reduce the staff. As simple as that. What Twitter is doing nowadays. Okay, is that what Twitter, the Facebook, is right? Amazon, what they are doing? Just they are removing the people. Is right? The same way. Understand? This is right. Relate what happens to the current situation. You will understand better in that way. Is it right? When there is a discontinuation, it is not a decision taken by the lower level or any management level. This decision is going to be taken at the top level. If that is the case, first you have to review the meeting minutes. See, anywhere, review the board meeting minutes, then you have to discuss. Is it right? First, what you have doing, review the board meeting. That is the substantive procedure. One by one. Is it right? Sequence by sequence. Here, people find difficult. Is it? Why do we find difficult? We have to follow the sequence. Got my? First, you have to review the. See, I will write. First, you have to review the board meeting. Second, you have to review the supporting documents. Third, you have to get the details. Is it right? Fourth, you have to do the recalculation. Fifth, you have to agree. Last, we have to obtain a return representation. And in the end, we are talking in terms of what? In terms of presentation and disclosure. Very simple. Now you will understand. Now you will understand. For substantive procedures means sequence by sequence. Is it right? Substantive. First review, get supporting documentations, get the details. You do recalculations. You agree with the recalculations with the payroll records, all the provisions. Next, agreeing is not. You have to get the return representation from the management. Then only you can show it in the financial statements. Is it right? This is very, you just write down this sequence. Is that first review? Then you have to review supporting documentation, details, recalculate, agree, getting the return representation. The last one is the disclosure. Nothing is there, is it right? Nothing is. Now see any substantive procedures. Got my point? Any substantive procedures in the examination you write, then you see the sequence. You should not get the return representation first. Nothing. No. You have to get the return representation last, and after that only there is a presentation. People will write presentation first, return representation second. Marks will not be awarded. Is that simply they will not give marks. Okay. Now you have a complete basic core understanding. Is it right? Review the board meetings for evidence that the product has been discontinued. Supporting document that the decision to discontinue was notified. To whom? Notified to the 4 members of the staff. We have to tell to the staff that why we don't want you. Is that we have to give explanation. Definitely that is the part. Is that because of this reason we are not going to continue with you. Obtain details of redundancy calculated by employee. Is it? Catch the schedule, total the schedule, and agree with what? Agree with the trial balance and financial statement. Recalculate again. Recalculate the provision. To confirm why we are doing recalculation? To make a completeness. Is it? Completeness to the cost of documentation such as employee contracts. Is that we should match whether each employee has been done fair enough or not. Is it right? Next, agree the payments made in July when they have made. Is it right? With the cash book or payroll records, and compare with the means we have paid as per the provisions or not. Is it right? We have paid as per the provisions or not. You have to make a comparison. Is it right? Third one, next one, you have to get from the return representation from the management that it has been done. Management should you have to get that yes, 4 employees has been removed and they have been paid in full. Is it right? Paid as per the terms and conditions. And last, review the disclosure in the financial statements as per which standard? IAS 37. Whenever provisions comes into the question, don't forget, is it right? Don't forget to mention IAS 37, provisions, contingent assets and contingent liabilities. Is it right? Next. You want me to stop? You want me to continue? You tell me first. If I continue for another 10 minutes, 10, 15 minutes, or you want me to stop? Take my word. Is it right? I will send you now. Okay, I will send you this question with question with a suggested answer now. Okay, as immediately I will send you. Okay, I will. Should I post it on the OneDrive or should I send by email?